Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Today, we're taking a look at Kellanova, ticker symbol K. Now, in case you are not familiar with Kellanova or were not paying attention in the last couple of weeks, Kellanova used to be Kellogg's, and that's why it has a single character ticker symbol. K used to be Kellogg's. Now, the one thing I don't understand is why the Kellogg's name went with the spin-off company, but the Kellogg's ticker symbol remained with Kellanova. But in any case, that's what they did. They spun off the North American cereal brands into its own company, which retained the Kellogg's name, but not the Kellogg's ticker symbol. And Kellanova retains all the other snack brands like Pop-Tarts and Cheez-Its and all sorts of other crunchy things you'd eat, while Kellogg's gets Rice Krispies and Frosted Flakes and dozens upon dozens of other cereal brands. And as you can see, the remaining company, Kellanova, is a mid-cap company, market cap of $17.25 billion. And here we are on Kellanova's annual chart, and you will see what happened. You can clearly pick out the day the split happened. It was right here, 29th of September. Following day, the share price dropped drastically and has fallen quite a bit even since then. So it is well below all the major moving averages as everyone scrambles to figure out what the cash flow on this company will be now without the cereals included. And the RSI is well oversold and it's trading sideways. The stochastics are oversold and are actually starting to tick up. The volume chart shows a considerable spike in volume, more red than green, although there are a few green bars in there as well. And the MACD fell precipitously and it looks to have formed something of a trough, but there's no sign of a bullish cross anytime soon. And if we switch over to the fundamentals here, I will stipulate first that Kellanova's fundamentals are remnants of the pre-split company. So take that for what it's worth. These fundamentals may not be entirely accurate. But at the moment, we list short interest at 2.57% and institutional ownership just shy of 80%. That is quite solid. The debt to equity ratio shows it does have considerable debt for the food processing industry. It has more debt than 82% of other companies in that industry. PE ratio is average for the industry at slightly over 20. The gross margin is high, well above average of 30%, and that beats out 70% of other companies in the industry. Operating margin is actually outstanding, even though the operating margin is only 10.41%. This is another industry that operates on extremely narrow margins. And that operating margin beats out 85% of other companies, which shows why Kellogg's has been able to sustain itself for so long. And if you look down here at the net profit margin, you see a net profit of 5.45%. And that is on the high end of what you'd expect for a very competitive retail seller. When we look over here, return on equity is excellent, 21.55%. And that beats out 87% of other competitors. Now, on the downside, the growth rate is low. After all, Kellogg's, or Kellanova, as it's now being called, is one of the monster food producers in North America and all around the world. So the growth for prepackaged, highly processed foods is only so big. And we have a growth rate less than 70% of other companies. Now, one concern here is the dividend. Dividend is high at 4.47%. The payout ratio is 93%. And that is concerning. We need to get that payout ratio down if they expect to sustain the dividend. Otherwise, any fluctuation would cause the dividend to either have to be scaled back or the company would have to go into debt to sustain it, neither of which are good options for investors. Now, on the positive side, and the reason I chose to look into Kellanova today is the change in share price versus the expected change in earnings. And as you'll see here, we have the revenue. The revenue is expected to decline by 11.2%. And that is due to the split off of the company from the loss of the North American cereal brands. The revenue is supposed to be in the new company. So if we deduct the amount of revenue that is switched over to the new Kellogg's company and keep all the old revenue that was coming in with Kellanova, you would end up with a expected 11.2% decline. However, as you can see, the share price has declined by approximately 27%. So that would represent a significant divergence between revenue and share price, one that would present a good buying opportunity for people who are looking to purchase into this company at the moment. But in any case, please let me know what you think of Kellanova or Kellogg's or both in the comments below. And remember, none of this is financial advice. I'm not a financial advisor. I make these videos for education, information, and discussion. But if you got something out of it, I would appreciate it if you hit the like button and subscribe to help out the channel. If you enjoy this content, please hit that bell notification to be alerted when new videos post. And if you'd like me to take a look at a particular company using these metrics, just mention that in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.